Hey, hi everyone. Welcome to the Price Rejector in Forex. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So what I'm going to talk about today is the Price Rejector. And what is the Price Rejector? It's an order flow tool designed to work on a normal bar chart. Now, if you're unfamiliar with me, you go to my website, www.orderflows.com, and you'll learn more about me. And I've been trading for over 20 years on an institutional level after leaving JP Morgan, where I spent 8 years of my life. I started trading on my own, and the order flow software out there was okay, but it didn't really analyze the order flow the way I like to analyze order flow. So I came up with my own software. I got a programmer to, I gave him my requirements, and he came up with a brilliant solution for me. And you go to my website, learn more about it at orderflows.com. Now, the Price Rejector is an indicator based on order flow analysis. People have come to me, traders have come to me and asking for a tool that they could just put on their normal chart. They don't want to look at a volume footprint chart. They just want to stick with their normal bar chart. Okay, so we worked on something and came up with the Price Rejector. It runs on the Ninja Trader trading platform. To learn more about that, go to www.ninjatrader.com. You can download their software for free. They have a paid version, which is good if you want to use the software to route your orders through the market. But you don't need the paid version. The free version you can use to trade in simulation mode, or just follow the markets till you feel comfortable opening up an account and getting a paid version of the software. The Price Rejector takes into account the volume traded on the bid and offer, recent price action, market imbalances, and is the market trending or trading in a range. Why is that last part important? Well, if you're going to take a trade, you want to take a trade, when a move has ended and a new move is about to start. You don't want to just take a trade in the middle of a market going nowhere or a market that's going sideways. You're going to have a lower probability of success. You want to give yourself a chance to have a more profitable trade. So you don't want to get at the edge of a move, the end of a move, or the beginning of a new move. Now, the Price Rejector is based on order flow. It's not based on lagging indicators such as moving averages, MACD, RSI, anything like that. It's not. It's based on market-generated information. Like I said, the volume traded on the bid offer, price action, market imbalances, and it determines whether you've been trending or stuck in a range. Okay, so that said, I'm going to show some charts from this morning. Okay, it's Tuesday, June 21st. It's just after 5:30 Chicago time. Okay, so this is a 1-minute EURUSD chart. The data comes from Kinetic, and it's the FXCM data feed. The date is June 21st, 2016. This is Chicago time here. So, in the morning, 2:20, just after, 2:25, you got a sell signal here. And we traded down from, 113.48 down to, the 36, 37 level. Then you get a buy signal. You trade up to, back up to the 45, 46 level. Get a sell signal down to another buy signal, or where you were earlier, 36, 37. Then you get a buy signal. It started to go up, and then it failed. But you have to have stops in, because when you're trying to find a recent low, or swing high or swing low, sometimes the market's going to take a while to find it. And so you got one, boom, you got this high, boom, you got this low, boom, you got this high, boom, you look like you're going to get this low, but the market wasn't convinced that this was going to be your low, and we traded lower. So And so this trade didn't work out. So you got, one winner, 2 winners, 3 winners, a loser. Okay, so what happens? We just trade lower, lower, lower. Boom, we get another buy. Starts going, it starts to work out, but then it just goes sideways on you for how many minutes? Let's count it. 1 bar, 2 bars, 3 bars, 4 bars, 5 bars, 6 bars. Again, it's 5 bars where you're just going nowhere. No move that happened. It's up to you whether or not you want to stay in a trade for 5 bars that's going nowhere. And it came down, got below 33, which is sort of the low for the entry signal. I mean, really, the entry would be in the next bar at around this 35 level. So depending on where you have your stop, if you're going to use 1 tick, 2 ticks, 3 ticks, 4 ticks, 5 ticks, it's up to you. But again, this market just went sideways. When the market's going sideways, it's not usually the best idea to stay inside a trade. You want to get out at either a small profit or a small loss, or you give it a little bit more breathing room. If you're going sideways, you think the market's consolidating before you make a move in one direction or the other. You're not going to have a tight stop. You might want to loosen it out a little bit. So, we're just sort of hanging around. Again, you're just hanging around. Eventually we started going higher. This is at 5 o'clock. Again, I said I'm recording this at 5:30, just after 5:30 Chicago time. So this is 5 o'clock. Get a buy, a quick pop up here. And, this is where we are right now. You got this buy here, which again is just kind of going sideways on you a little bit lower. Your entry would be somewhere around this 40 area. Right now we're trading 39, and it's already how many bars in there? 1, 2, 3, 4, 5. Again, you got to decide, do you want to stick with that or not? What you want is a quick move up, get your ticks, get your pips, and move on to the next trade. Okay, just real quick, this is a EURUSD 5-minute chart. There were no signals this morning. I'm showing it just so there was no signals, so you don't say I didn't show you because there was a bunch of signals that failed. I'm throwing it up there just so you can see there was no buys, no sells on this EURUSD 5-minute chart. Okay, here's a Euro Japanese Yen chart. It's a 5-minute chart. About 4 o'clock, you got a sell signal, and we traded down from this area in here around the 40, 38, 39 level. It's a 5-minute chart. Traded down good 15 ticks, almost 20 ticks. We did get down to 20. So it was about a 20 tick move. It came back up. You got another sell signal, but this one didn't work out. This one was stopped you out. So you had one nice trade, one loser there. Okay, so thanks for watching this video. To learn more about the trading software used in this presentation and how you can profit from order flow trading, visit my website www.orderflows.com or www.pricerejector.com. I run both sites. You can see I got an hour-long video that really explains the Price Rejector in depth on the Price Rejector site. So check it out and give it a try. I think it's as a trader you have to have different tools in your toolbox. If you're trading with just one methodology, one setup, they're going to hit bad stretches. You need different setups that are going to be occurring at different times. And trading is a bit like building a house. You're going to use a hammer, but then you need a screwdriver. You need a wrench. You need pliers. You need different tools in your toolbox. If you're just approaching the market with one thing, then when it's not working, it gets I'll say broken, but the tool will get broken. But when your way of trading isn't working, then it's time to look at another way. And the nice thing about the Price Rejector is that it could run on a normal bar chart. You don't need an order flows chart. Although I do think to get the most out of it, you should be analyzing it in context of the market rather than just taking trades without any context to what the volume is doing or where the market's going. So give it watch the video, give it a try, and I think you'll be pleasantly surprised. So thanks for watching, and see you on the inside.